Well, it was the power of positive thinking today as investors helped drive the market more than 1% higher. I spoke to Charlie Aitken from Bell Potter a little earlier. Well, Charlie Aitken, not a bad start to the week. How much did that monetary policy easing in China have to do with the rally today?
Oh, I'd say about 80% of it, Tiki. I mean, the market had a good day. I mean, that was a little bit of a surprise, the People's Bank of China cutting the reserve requirement for their banks. That came out on Saturday and wasn't expected. But you've got to put it in context. The whole region is up about 1% today, and we went up in sympathy with it. And there's a little bit of hope towards some sort of Greek solution too. But really, the Chinese reserve requirement was the main driver of the rally today.
Right, well, we're now into the busiest week of the profit reporting season, and I see packaging giant Amcor has reported a 9% slide in first half profit, but the share price went up 4%. Can you unpack that for me?
We can try and unpack that, Tiki. It's a good one. I like it. Well, what happened there was the underlying profit was actually a record, up 14%. So there's a couple of one-offs in the first half result at the NPAT level, so you do get the 9% headline drop in the profit. But the market looked through that today. The dividend was also up, and the outlook from Ken McKenzie, who's well regarded by investors, was pretty solid too. The other thing was, Tiki, the market had been worried that the currency had been hurting Amcor, and it seemed in the underlying result that the currency hadn't had that bigger impact. So, you know, stock was up 4%, so the market looking through the headline number.
A plunge in profits for the fund manager Challenger Limited, and the market has responded as you'd expect, I guess.
Well, this is a funny one because it's always a bit messy, the Challenger result, but there's no doubt that the result at the underlying level was worse than analysts were expecting. I think most analysts will be downgrading earnings by about 7% today. This sort of things happen in three. You've got to remember that Packer sold his shares in Challenger a little while ago, then the CEO left, and now there's a slight earnings miss. So investors just a bit iffy on that one. The stock down 3.5%.
And what do you make of the numbers from property group GPT?
Well, these were very solid. Now, this is a stock that just flies under the radar. You know, it had a near-death experience in the GFC, but it's come back to be a very, I suppose, old-school property trust, just 22% gearing. 60% of its assets are retail assets, the other 30% office assets. But the underlying result was good for the year. The dividend is up, the gearing is down, and the outlook was quite bright too. And I think it's one that investors are slowly going to re-rate, and the stock was up about 1.5% today.
Charlie Aitken, thank you very much for joining us today.
Thank you, Tiki.